Now, we've got some breaking news. We're just hearing that India's Adani Enterprises has called off its share sale. Let's cross over to Mumbai, where our India business correspondent Archana Shukla can take us through the most important points. So, Archana, just bring us up to date. This is just breaking right now in terms of Adani Enterprises.
Adani Enterprises had just closed a $2.5 billion share sale exercise yesterday with help of some HNIs and corporate houses that had come in at the last minute, and the offer was fully subscribed. But today, it was a worst day for Adani stocks. It was the fifth day when Adani stocks were in a free fall, and in fact, the worst day where they lost about 30%. Some of the shares were down 30%, and about $84 billion worth of market valuation in Adani Group stocks have been lost in the last 5 trading sessions. And today, the company came out with a statement to say that looking at the stock market route, the fact that the company stocks were fluctuating today through the day, the company feels it is not morally correct to go ahead with the share sale, so they are cancelling this share sale offer. The proceeds will be returned back to the investors who had invested in this share sale exercise. Now, this was the 5th day after Hindenburg, the US-based short seller, came out with a report saying that Adani Group companies have a high debt exposure, their stocks are overvalued as compared to peers, and there were allegations of fraud and stock market manipulation by Adani Group companies. The stock has been in a free fall since then, and it went through the share sale during that period, but now the company has come ahead and said they are cancelling. Now, this also brings a big question mark on the investor faith in the company right now, especially offshore investors who are seeking more answers based on the Hindenburg report. While the company on last Sunday came out with a 413-page rebuttal, calling the Hindenburg report as baseless and an attack on India and India's growth story, it still feels that investors are not yet happy with the responses. Analysts say that investors are looking for more details on how the company looks at these allegations and disclosures. And the bigger concern is about the high debt on companies' books. Simultaneously, while $84 billion were wiped out of the overall market valuation of Adani Group shares, Gautam Adani, who's the biggest, one of the largest conglomerates here, and a business tycoon, he lost about $48 billion in his personal wealth as well, and he lost his coveted position of being Asia's richest person as well today. And he now, in fact, is trailing Reliance Industries' Mukesh Ambani to be the second richest Indian in India. So, a lot of questions. Scrutiny is increasing on Adani Group companies. Australian regulator has now said that they would be closely looking into the Hindenburg report as well. Credit rating agencies like ICRA are also monitoring the situation. However, Indian government and the Indian stock regulator has yet not made a comment on this entire issue.
Archana, really crucial, and thank you for stressing that the Adani Group has consistently denied the allegations put forward by the Hindenburg Research Group in their report. But just in terms of, as we kind of get our heads around this idea that they are calling off their share sale, just remind us, the Adani Group, it's absolutely huge in terms of the reach, the scope of its business. Just remind us of where the business lies.
Absolutely. Adani Group, in the last 3 decades, they've built a $220 billion empire that has interests across ports, airports, renewable energy, edible oils, mining, and the others. Gautam Adani rose to be the richest Asian and the 3rd richest on the world billionaires list as well. But the meteoric rise that the company saw was largely in the last 4 to 5 years that they have seen. And this was one of the concerns raised in the Hindenburg report as well, where they said that most of the Adani key stocks are overvalued as compared to their peers, and the rise in the company's valuations is based on stock price rise, where some of the Adani stocks had seen an increase of 800 and some stocks even 2,000% in the last 3 years itself, and that cannot be based on fundamentals. At this this was the concern, and most of the expansions that Adani Group has done has been funded through debt, and that's been one of the bigger concerns that even other analysts in the past have also raised, and was one of the bigger concerns in Hindenburg report as well. Adani rebuttal did talk about the report being baseless. They said that most of these allegations have already been cleared by regulators here in India, and they said that it was an attack. It was a calculated attack on India and India's growth story. But we certainly understand now, with how things have moved, that concerns on corporate governance on the group are coming back in. Just one more point. This $2.5 billion share sale exercise, which was the largest in the country ever to go through, this was also done with an intent to expand their investor base, bring in more retail investors, so that there is more investor appetite for Adani Groups and there is more credibility of the group overall. But the way the share sale the exercise went through also raises question on that attempt of Adani Group. While there are regulators who want to look deeper into the Hindenburg report, but it did dent investor sentiment in Adani Group stocks.
And they've always denied the allegations made by Hindenburg. Archana, Shukla, thank you very much for getting across all of that.